our United States dollar is facing one of its biggest challenge ever because of something called de-dollarization. And what de-dollarization is we're seeing big countries around the world essentially pull away from the dollar. And the reason why that's so significant is because the United States dollar is the world's reserve currency, and we're kind of like the world's superpower, and that gives us a lot of ability. One of that ability is the ability to essentially print money, because countries around the world want to save their money in dollars. And people around the world also want to own and save dollars. And now as we're seeing these big countries start to pull away from the dollar, it shows that you have a lot of powers around the world that don't like being controlled by the United States. They don't like being bullied by the dollar, and they want to pull away from that. And the reason why that matters is because if we continue to see more of this de-dollarization happen, it can reduce the value of the dollar. And if you see the value of the dollar drop, well, the currency that we use to conduct and transact everything would lose value. And that would make the inflation problem significantly worse. Right now, the reason why we have high inflation is because we printed a lot of money over the last few years. But you got to remember, we printed a lot of money, but the reason we were able to do so was because we have the power as the world's reserve currency and as the world's superpower country. And if we start to get that challenged and people start to not value the dollar so much and the dollar starts to lose its value, not only would we potentially lose some of the ability to print as much money, but we also lose some of the value of the currency that we have right now, which would make the inflation problem significantly worse. And we know how to deal with economic pain. Like, we've had recessions many, many times in the last century. We know how to deal with a recession. But dealing with a currency crisis or a dollar crisis is much more painful and much more significant, which is why this dollar de-dollarization is such a big concern. And this really started back in 2022. That was when the first real step of the dollar de-dollarization started, because when Russia invaded Ukraine and started attacking Ukraine, that was when the United States put a freeze on Russia's assets. So the United States froze hundreds of billions of dollars, US dollars, of Russia's assets, their money that we froze because we wanted to sanction Russia. We, the United States, did not like what Russia was doing, so we froze your currency. And this put up a lot of red flags for countries around the world, because, there's a lot of countries in the world that don't like the United States. But when they saw that, it really created a big red flag, because they saw that if they do something, this other country in the world does something that the United States does not like, then the United States might freeze their money. And that created some concerns around the world, or really, let's say, amplified these concerns, because these concerns have been around forever. But those concerns really amplified when we saw Russia's assets get frozen by the United States. And we saw countries start to take action on that. The second thing that happened was then later that year in 2022, China went to Saudi Arabia. And they said that we want you to sell us oil, not in the dollar, but in our currency, the yuan. And the reason why this matters is you might have heard of this term called the petrodollar. And the petrodollar essentially means that while the United States dollar isn't backed by physical metals, it's not backed by physical gold, it's not backed by silver, it's not even backed by oil, it's backed by the full faith and credit of the United States government. We are the strongest government in the world, we have the strongest military presence in the world, we have the strongest economy in the world, plus countries around the world have to transact with dollars. And one of the commodities that everybody in the world needs and uses is oil. And if you wanted to buy oil, you had to use the dollar. This provided strength to the dollar because it guaranteed that if you wanted to make a transaction in oil, you had to use our currency. Even if you are, let's just say, China, who doesn't use the dollar, and you wanted to transact with a different country which didn't use the dollar, you would have to transact with the dollar to buy oil, which provides reassurance and stability and security to the dollar, because if anybody in the world, and a lot of people or everybody in the world needs oil, well, you have to use the dollar to get it. So that provides stability and strength to the dollar. Then China went to Saudi Arabia and said, you know what? We're tired of this petrodollar system. we want to be able to buy oil in our own native currency, the yuan. And that's what started to happen. For the first time in, modern history, we saw transactions occur with oil, not with the dollar, but with a different currency. Now, again, that poses a big threat to the dollar because now that means that countries can make transactions with a currency that's not the dollar when it comes to oil, which hurts the power and the strength of the dollar. The third thing that happened kind of around the same time is we saw the BRICS nations, Brazil, Russia, India, China, and South Africa come together and say that first we want to create a new currency. We don't want to continue being bullied by the United States. We don't want to continue being under the rule of the dollar. We want to work together to create our own reserve currency. That way we can transact with whoever we want with our own currency and not have to go through the dollar. And then the second thing was that they want this new currency to be backed by precious metals like physical gold. Now, again, we covered this entire BRICS story in Market Briefs, which is why, again, if you have not joined Market Briefs, I highly recommend you do so. It's a completely free way for you to stay up to date on what's happening in the top financial news into a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join for free down in the description below. But this is where now we have the BRICS nations that came together that said we want to create a new currency, and then they wanted to be backed by precious metals like physical gold. And then what we saw happen was we saw central banks around the world buy more physical gold than we have seen in 5 decades. Tons and tons and tons, literally tons, like physical tons of gold were acquired in the last 12 months as these central banks want to create a new currency with more stability, that's safer, that's backed by precious metals. And then the fourth thing that happened, and this is much more recent now, is we saw now countries who trade in the dollar make agreements outside of the United States to say we're no longer going to trade with the dollar. The most notable example of this was the Brazil and China agreement. This happened recently in 2023 where Brazil and China came together and said that we're going to ditch the dollar. Neither of them have the dollar as their currency. They both have their own native currencies, but before this agreement, they had to trade with the dollar, meaning that if they wanted to buy something in their respective country, they had to convert their currency to the dollar and then use that dollar to buy the item, and then the other country would have that dollar or currency then. But now this new agreement says that Brazil and China will be able to trade with each other with their own respective currencies, which means, again, they're ditching the dollar and don't have to use the dollar to make the transactions. What does that do? It reduces the strength of the dollar in that instance because, again, less people have to use the dollar in order to transact. And the value of our dollar isn't physical gold. It isn't silver. It's backed by a promise. It's backed by the promise that the United States government believes that we have value in that dollar. And if people don't believe that the dollar has value, then the currency begins to lose value. So it started with the petrodollar started to lose its potential value. Now we have Brazil and China doing the same thing in their own respective trades. And then we have our own issues here in the economy with the dollar health. The first issue here is naturally the national debt that we have. We have more than $31 trillion worth of national debt. And coupled with that, we also have extremely high inflation. So now think about this from the perspective of an investor. If you're a foreign country and you want to save your money and you want to put it somewhere safe, you want to put your money to the safest thing possible, which has been the United States dollar. But again, if you see high inflation, that means that the value of the dollar is dropping. And if you see high inflation with high national debt, that can be very concerning. And so now you have countries around the world that are looking at this saying, yeah, we like the dollar. It's the safest place to put our money. You are the world's strongest economy, the world's strongest military, but you have all this national debt. Can't that be a problem? I mean, isn't it going to be a problem for you to be able to make the payments on this debt? Because if you can't make the payments on this debt and you default, the value of the dollar will plummet. And we don't want to be in that situation when that happens. Not to mention the fact that you also still have such high inflation. Yeah, it's come down off its highs, but it's still extremely high, which means that our savings, our dollars, are losing value. That's a risk. And then more recently, we have the issues with our banking sector and the economy. And yeah, we've seen the credit crunch after the Silicon Valley Bank collapse, but we also have the worries about an economic slowdown and the recession, which has people worried and wondering what's going to happen to the health of the dollar. What's going to happen to the United States economy? Because if we see the economy go down and the value of the dollar go down, that makes saving your money in the dollar, especially when you are a foreign country that wants to protect the health of your investments, it makes it a little bit more risky for them. And that's why we've been seeing now a lot of this de-dollarization. And it started off kind of as a conspiracy theory. And I would say until about late 2022, that conspiracy theory turned into like, oh crap, this might be a real thing. And now, again, take this with a grain of salt. Take it with a bit of caution, because the reality is there's a lot of emotion out there. There's a lot of people that spew fear. There's a lot of people that spew panic. But no good financial decision ever comes from panic. No good financial decision ever comes from fear. No good financial decision ever comes from greed. This is where I want you to understand what's happening. That way you can make better decisions for yourself. Look, today, the dollar is still the world's reserve currency. The dollar today is still the strongest currency in the world. The dollar today is still a part of the strongest country in the world. That is where we are right now. Are there risks? Absolutely. I think the best resource that I can give you for this is a book by Ray Dalio. Ray Dalio is the founder of Bridgewater, which is the largest hedge fund in the world. And he wrote a book called The Principles for the Changing World Order. And by world order, he means the world's reserve currency and the world's superpower. And what he discusses is that everything, people, businesses, and countries have a lifespan. And that lifespan follows a similar curve no matter which century you're in. And part of that curve is the debasing of your currency, meaning the value of your currency going down because you print money. Why do these countries print money? Because you want to continue growing the economy, and then you start to have a lot of obligations. People want better lives. People need better jobs. People need more money, so the government just keeps printing and printing and printing, and then they start providing aid to other countries around the world, and you keep printing and printing and printing, and eventually people start to lose faith in that currency. People start to lose faith in that thing that you have, which then causes the value of that thing to go down, which then creates opportunities for other countries and currencies around the world to then take a leap forward. I would recommend you read that book. That book has a ton of value and education in there. But this is where now understanding, okay, if all these things are happening in the world right now, what can I do? Now, for one, it's like I always say, be prepared and financially educated, but you can make investments that help protect you, because if the value of the dollar goes down, that means your cash value goes down. And that also happens when you have high inflation. Now, this doesn't mean you shouldn't have any cash, but just understand that when you have inflation or the value of the dollar dropping, that hurts the value of dollars. So where can you put that money? Well, I own some physical gold, and I can't tell you what to do. I do not recommend anything that I do for anybody. I'm just telling you what I do, and then you can figure out what it is that you want to do for yourself, because the reality is investing has risks, and you want to always do your own due diligence. Never blindly trust a random guy on YouTube. But this is where now I own a little bit of gold. It's about 2% of my total investment portfolio. Is it a huge chunk? No. It's my insurance. It's a hedge. I don't look at my gold investment like it's an investment. In fact, I look at it like an alternative way to save money. It's a way for me to save hard money. I've been buying gold for, I don't know, a long time now. I buy a little bit of gold every month, and it just sits there. It doesn't do anything. It doesn't provide any value. I don't really even monitor the price of gold. Whatever happens to the price of gold happens. I don't really care. It's just an alternative way for me to save money. And the reason why I buy gold is because the way that I look at it is, if I was to save $50,000 of cash, and I saved $50,000 worth of gold today, and I buried both of these in my backyard today, and then 10 years from now, I go to my backyard and I dig up the gold and I dig up the cash, which one of these will have more buying power? My theory is that the physical gold is going to have more buying power than the cash. And so that's why I own a little bit of gold as that insurance, as a protection, as the hedge. And other people look at cryptocurrency as another hedge. Now, again, I don't recommend this to anybody, but cryptocurrency is very risky. I own crypto, but it's very risky. It's very speculative. It's very volatile. It can go down to zero. And so now if you're going to be investing in cryptocurrency, understand the risks, understand that it can go up very quickly and it can go down just as quickly. And if you're not willing to accept that risk and that potential of going to zero, do not buy cryptocurrency. If you can't invest in it as a long-term investment and don't believe that it will grow, do not buy cryptocurrency and never invest more than you're willing to lose. So with cryptocurrency, yes, it can grow very quickly, but it can fall just as fast. So understand that risk and understand that it's very speculative, and yes, it can go down to zero as well. Another thing is looking for hard assets, things like physical real estate. I own physical real estate. That can be an opportunity for you to own something that has tangible value, because let's just say worst case scenario right now when the dollar goes down to zero, which isn't that likely, because guess what? The United States still has a strong military presence and a very strong economy. But let's just keep going with the worst case scenario. If the dollar no longer exists and you own real estate, well, now you could change your rent from $1,000 a month to 2 chickens a month or 10 eggs a month or whatever it is that you want, because you own that value producing asset. So real estate provides some value there. You can also diversify some of your potential stock holdings to emerging markets or countries that are not reliant on the dollar. There are ETFs and funds that give you exposure to international economies, international companies, international real estate, emerging markets. Is something for you to consider. It's more risky because now these other countries might be smaller. They might not have as strong of a military presence. They might not have as much law and order. They might not have the same infrastructure that the United States has. But it's something that you can consider as another form of diversification. And you can work to increase the value that you can provide. How can you provide more value that way you could earn more money? How can you provide a value that can be applied worldwide? How can you create a better skill set for yourself? That way you can continue to provide more value, because at the end of the day, even if a company relies on a dollar, that company is still providing value. So if the currency changes, they can still continue to provide value. Now, of course, if the dollar continues to lose value, that hurts companies. That hurts things. But understanding the importance of investing in value things and how you can do that. Now, again, there's a lot of ways that you can invest your money. Stocks, real estate, crypto, businesses, your own business idea, your own education. There's an unlimited number of things that you can invest your money in. But the key here is to get started with something, at least start investing. I think that's the most important thing, not to be worried so much about the dollar, not to be worried so much about the economy, not to be worried so much about inflation, but use this as a reason to start getting financially educated. Because we are taught in our economic system to go to school, get a job, and work as an employee. But in this system, in this economic system, in this capitalist system, there are two ways that you can get paid. You can get paid from your job, aka your labor, or you can get paid from your capital. Our entire education system is designed to teach you to learn and earn from your labor. Period. You go to school to learn to get a job. Period. But in this economic system, in this capitalist system, the people who make the most money are not the people who earn it from their jobs. It's people who earn it from their capital, meaning you earn it from what you own. That is how you win in this economic system. Now, the reason why this makes so many people upset is because we're never taught this. And I feel you. When I learned about this the first time, I was very upset too, because I went through a lot of schooling. I went through high school, I went through college, I went through a year of graduate school, and then I went through law school. And never once did I learn a thing about money or investing or passive income or building wealth. So I get it. But now, let's go to the way that our system works. Our system is designed this way, which means that the people who become the wealthiest are the people who earn from what they own, not the people who earn from what they do. But we're only taught to earn from what we do, which means you got to continue doing to get paid. You get that paycheck. Then what do you do with that paycheck? If you blow all that paycheck, you are contributing to growing the economy. Thank you for your service. But it does not grow your wealth. Our economic system grows when you spend money. It grows even faster when you go into debt to spend money. But it doesn't grow your wealth. If you want to grow your wealth, you have to do things a little bit differently. Now you have to work to earn. And then instead of spending all that money, you got to take a piece of that money and then you got to invest it into assets. The things like I've been talking about, stocks, real estate, businesses. You want to take the money that you're working to earn and invest it into places that way you can grow what you own. That way you can get paid from your capital, meaning your money, instead of just your labor. Once you start to do that, that's how you can start to grow your capital investments. You work to earn money, but why are you earning money? The average American is working to earn money to buy things. This is why the average American will never be able to build true financial freedom or wealth for themselves. Because if you're working to buy things, you're working to make everybody else around you rich. But if you really want to become rich yourself, you have to become a completely different thinker. You have to work not to buy things, but you have to work to build your wealth. And now if you want to work to build your wealth, it doesn't come from your salary, it comes from what you own, which means you have to work to buy assets. You are working to buy assets, period. If you are working to buy assets, you will be able to become wealthy because now you're going to work to get paid. That way you can buy more assets. This might be stocks, this might be real estate, it might be businesses, whatever it might be, but you're going to work for one reason, to buy more assets. The more assets you can accumulate, the more wealth that you can build, because these assets can continue to pay you even when you are not working. And then if you continue to work to accumulate these assets, well then these assets can also pay you to live your lifestyle. And if you do it correctly, well, and you do this long enough and you continue to put in the effort, you work to earn more money so you can buy more assets, eventually you will hit a point where now your assets will be able to buy you the lifestyle that you want, and you no longer have to worry about the money because your assets are working to earn you more than you are from your job or from wherever it is that you're running. That is true financial freedom. And if you want to worry about what's going on with the de-dollarization, then the proper diversification can help you with that. Proper diversification does not mean diversifying your money in your stock market portfolio. To the average person, diversification means I own a blue chip ETF, I own a dividend ETF, I own a REIT ETF, and I own an innovation ETF. The problem with that is they're all paper assets. That's not true diversification. True, real diversification is you own some paper assets like stocks. You own some cash flow producing hard assets like real estate. You invest in something like maybe a little bit of physical gold. This is now true diversification because now you're diversifying your money across different asset classes. But in order for you to do that, you need to, one, get financially educated, and then second, you have to change how you're using your money. Because if you're spending all your money, it doesn't make a difference what your education is because you have no money to actually invest. You have to start using your money as a tool instead of as a fool, which is kind of a funny rhyme that I created. But you have to start using your money as a tool. That way you can use your money to make yourself rich so you can make yourself wealthy before you make everybody else around you successful. And the unfortunate reality, it sucks, but the way that our economic system designed is that it is profitable to keep you broke. It's profitable to keep you in that system where you're just spinning your wheels, working to earn money, going into debt to buy things, and then wondering why you're never wealthy yourself. It's profitable because, well, that means you spend more money. The more money you spend, the more money somebody else makes. What I'm saying is flip it around. Use that money to make yourself rich first. Then when you get that richness, then yeah, by all means, go out and buy whatever you want. I'm not saying don't buy the nice things. I'm saying make sure you can afford it first. Make yourself rich, that way you can afford to buy whatever nice things that you want. That way you can actually enjoy the money without stressing about money. Because one of the strangest things that happen is people go out and they buy a brand new car and they talk about how much they love the new car. And then 3 weeks later, they start complaining about gas prices. Oh my God, I can't believe gas prices are this high and I have to put premium gas in my BMW. And then 2 months later, they start complaining about the car payments. Man, these car payments are hard, and then I got to pay for insurance, and I got to pay for the maintenance on my BMW. Do you know how much it costs to get an oil change on my BMW? You work hard to get the car, you struggle to pay the gas, you struggle to pay the maintenance. Instead, flip it around. Drive a Toyota Corolla with cash, which doesn't have the premium gas. Hopefully it's in good working condition, so you don't got to keep getting that expensive oil change, and you don't got to worry too much about the maintenance. Invest the money instead, buy the assets, then let the assets pay for the car for you. And now you don't got to worry about the payments and the expenses as much because you have the assets that are working to spend that money. They're working to earn the money. That way you can spend it without having to worry about the price. But it requires a complete shift in the way you think and the way that you use your money. And until you take the first step to take action, to one, believe it's possible, and then actually start learning. You can start, it's so much more accessible now because YouTube has made learning about financial education so much easier. Because back when I started learning this stuff, when I first started learning about money, because nobody in my family told me what investing was. Nobody in my family knew what real estate investing was. No, I had zero financial education. The only financial education that I had was I got to become a doctor, because if you're a doctor, you can earn a big salary, and if you earn a big salary, you can become rich. That was the extent of my financial education. When I started learning, I had to read books, and I hate reading. English was my second language. I never read. I did really bad in English. So I started reading. And the first book that I ever read was a book about money. It was called Rich Dad, Poor Dad by Robert Kiyosaki. And then I started learning about this idea of investing in money, which I'd never been exposed to before. Then I started reading books by Dave Ramsey, Total Money Makeover. I highly recommend anybody getting started with their financial education, start with those two books, Rich Dad, Poor Dad, and the Total Money Makeover. Rich Dad, Poor Dad is by Robert Kiyosaki. Total Money Makeover is by Dave Ramsey. Two completely different points of view, but talk about money in completely different ways that you need to understand both of. And then I started just reading more and more books about entrepreneurship and financial education, and then I started doing it myself. But this is where, yes, you got to go through that emotional curve. The first time you learn this, you probably will be upset and angry, but then you got to learn the rules to the game, because if you don't learn the rules to the game, you will continue to be a pawn in the game, and understand that there's a lot of craziness happening in the world with high inflation, with the economic slowdown, with higher interest rates, with de-dollarization, but everything creates opportunity. There's always opportunity to be found, and unfortunately or fortunately, depending on how you look at it, the bigger the craziness, the bigger the opportunity. The bigger the pain, the bigger the opportunity. So now, when you understand this, the question is, what do you do? If you get prepared and you educate, meaning you start to work to use your money smarter, and then you work to build your financial education, when you see the opportunity, what do you do? Can you capitalize on it or not? And if you can capitalize on it, well, then you can then have the ability to build insane amounts of wealth, but it requires you to understand the system and what's going on and how to be prepared, because reality is it's going to happen. There are always going to be periods of opportunity. There's always going to be periods of economic pain. That will continue to happen. Some people will use it as an opportunity to build wealth. Some people will get hurt because of it. Which side do you want to be on? And this is where now, we can either be righteous or you can be right. And I don't know who said that. I read that somewhere in some book. But, there's a lot of craziness in the world. And what I'm trying to get you to understand is, look, this is the system. This is what's going on. This is the reality. These are the red flags. Prepare. If nothing bad happens, oh well. You got a big bank account. If you see opportunity, well, then you can capitalize on it, because now you're prepared and you're financially educated to do so. So now the question is, which side do you want to be on? And how are you going to start preparing? And that financial education now is thankfully so much more accessible than ever before. We are in the calm before the recession storm. At least that's according to Jamie Dimon, who is the CEO at JP Morgan Chase Bank. Every year, JP Morgan puts out their own annual statement where they talk about their opinions of what's going on in the economy, their worries about the economy, what they think is coming in the economy, and then Jamie Dimon also